Intellect design arena posted healthy set of numbers. To get more insight on the company's growth drivers and debt, we have with us Arun Jain, Chairman and MD of the company. Mr. Jain, thanks a lot for joining us today on BloombergQuint. First up, if you could tell us what are the projects and the deals that have been driving the growth for your company?
Yeah, I think this quarter, Intellect has achieved 21% top line growth in dollar terms, and this is driven by 12 deal wins, which is there, out of which 3 are digital transformation deal. And why the transformation deals are so important in our journey, because the value of this deal and license value of this deal substantially add to the bottom line, and that's what is driving it. So 3 deals, one is the largest Thailand bank choosing for digital transformation, one Indian top 5 bank choosing for digital transformation for corporate banking, and government e-marketplace deal, the 3rd deal which is there in digital space. I think all are fantastic deals during this quarter. An important point is in this quarter, our license revenue crossed 60 crore alone from the licenses, and 100 crore with license plus AMC if you add back to it. So 100 crore per quarter. 100 is a very, very sweet number for us to look at it, because for product company, license revenue is a critical measure. How do we grow the business?
Well, your company was awarded 12 deals, including 3 large digital transformational deals in the second quarter of this fiscal. Could you tell us more about the size of these deals and what does this mean for the financials going ahead? Basically, we just want to understand the trends which we are seeing for your company in terms of the deal wins.
Okay, so let me just look at what investors are looking. They are looking for predictable and profitable growth. There are 2 elements. One is predictable, second is profitable. To answer the first question, I would say predictability. Predictability is determined the way market is moving towards, whether our business is aligned to the market is moving. I think market is moving towards more buying decision than build of the software products. So the market is moving from services, which is build space, versus buying space, which is product space. So that's the first point. Second point on predictability comes from my competitive landscape, where we are positioning as a company. So whether Intellect is top 3 in a chosen spaces, I think that's where the critical differentiation comes for the investor. If our company becomes, so now we are rated number 2 in digital globally, and we are rating number 1 in transaction banking for open API banking services by Gartner. I think these 2 landmarks gives us a position of strength in the marketplace. Then we come to the funnel. How is the funnel looking like over the period of time? It's a $433 million funnel with 200 opportunities, but that's not so important. Important is 28 destiny deals which we are looking at it. So every quarter we get a decision on around 15 to 20% deal get decided during the quarter. And in destiny deals, our focus is much higher, and our win rate is around 60% of the deals we won in the destiny deals. So these are the 3 parameters which is driving the entire change. And finally, it's a leadership team which goes as a team. So we had one key learning in last quarter, in last 1 year, is that sales are not done by one person or one salesperson. Now it's a team, a basketball team, which goes and position around the client, and that basketball team wins it, where there's a business leader, there's a product leader, there's a technology leader, there's a delivery leader, there's a business manager, assurance team. All of them come together and then drive the sense of the business deals. So this is a very, very interesting learning place for an Indian company to really aspiring to take a center stage in the global marketplace.
Nearly half of your revenues, they come from Europe and America. What are you picking up from your clients there when it comes to new technology requirements?
Yeah, so I think you have really picked up the right thing, that our Europe revenues are 35%, but there is huge scope of growing our revenues in America. It's just 13%, and where the largest spend is happening. So the trends which are happening is clearly are happening in artificial intelligence space, in big data space, in open banking space, in cloud space. So I think what we have done is we have taken digital and insurance sector to be positioned in Americas, and our insurance we have developed a AI molecule for underwriters. So underwriter can make faster decision using unstructured data from social media and structured data which is available from various data sources and enable him to take an underwriting decision, intelligent underwriting decision. That molecule took us almost 2.5 years to prepare that molecule. Today we have almost 3 deals we have closed, and we have close to another 14 deals which is on the pipeline, which has the potential to close. I think that's a way we want to address American market. American market is the most difficult for anybody else to enter. Even European players are not able to enter to American market. We are using next cutting edge technology to enter into the American market, and that's where our differentiation is, and that's where the dollars are getting spent in the marketplace. It's digital, it's artificial intelligence, it's machine learning, it's cloud.
Mr. Jain, a word on your debt. In comparison, what we've observed to March quarter on consolidated basis, your gross debt has come off. Are we likely to see further reduction, or are you comfortable with these levels?
Yeah, we are just only two debt level. We have a $20 million long-term debt, which is a foreign currency term loan, and we have some promoter debt, which may come down because some of the real estate we can sell it off to hive it off. So today the debt is the $20 million of the term loan debt and around 50 crore of the promoter debt, which may come down.
All right, Mr. Jain, thanks a lot for joining us today and taking us through your September quarter earnings.